everyone, John Henry here, SlingshotFutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 8th of February, that's 2/8 of 18. Overall, a pretty mild day for the most part with some decent moves in there, but man, it was a pretty slow morning. Only a few things moving around. Of course, the index market's still going crazy, but before we jump on in, as always, make sure to swing it over to SlingshotFutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you'll be able to sign up for our email list so you'll be notified every time one of these videos comes out. Along with that, inside the email, we go over a bunch of stuff that we just don't have time to talk about on the video, and that's going to be different stocks, crypto, whatever's moving or of interest. It'll show up in there in the Daily Outlook newsletter. Of course, if you haven't done it already, make sure to click on the free 3-day trial in the room, live trading subscription and trial info. From there, you'll be able to sign up for that free 3-day trial and hang out with us for a couple days. You can get your feet a little bit wet and kind of see how we approach the market every day and see how we're trading it every morning session. Really good way to kind of get an inside scoop for a few days on what we're all doing. So first of all, taking a look at the euro has officially broken down, right? We have crossed through that major level of support. 23,695 has now broken, and that is going to be the hot spot. That area is what I am looking for on a retest to turn into resistance. Remember, what was support generally used to be resistance, and what used to be resistance will end up turning into support and vice versa. It always tends to go back and forth. So if the market can come back up to retest that area, 23,695 has now become an official level of resistance that I'm looking for potential selling off of. Really just the move that I'm looking for right now is to probably go a little bit sideways, maybe even pull back a little bit on this big bear drop. Every time we've seen a big bear candle on the euro, the market has tended to, for the next candle, kind of pull back against itself. We have 4 examples of it right here. Now we have another one, and actually even one right there. We're probably going to stagnate for this next 4-hour candle before it really starts doing anything. Aside from that, though, everything else looks pretty strong, likely going to continue to the bear side move, looking for the 200 period moving average test just underneath us at 2247, as well as the rising channel support just underneath us. Next area of support kind of culminating all on one another with 2 different levels stacking up, channel lows and the moving average coming into place. Oh, and don't forget, we also have that previous swing low trap, and if it wants to go a little bit further, maybe a quick wick down or something like that, we do also have those previous swing highs acting as support as well. So a big kind of brick wall of support in the way for the buyers to start defending on further movement to the downside. So although I am anticipating the bears to continue this move down after a little bit of stagnation, we do have a lot of support underneath us. So short term, is to the short side, but in the longer term, definitely still looking for buyers to be building in on this dip for a larger move back up towards the highs. Over on gold. Gold is also kind of giving up its paces a little bit. Now, a little bit of a different scenario here, though. Obviously, it is bearish, just like the euro catching a big breakdown. But one notable difference here is we have a very nice, obvious bear channel that's been working its way lower. And we've been talking about this third test, right? The 1, 2, 3, I guess kind of 4. But that 4th test of the channel coming in to kind of confirm that the channel exists on the bottom edge. And we've now kind of blown through that low. That could mean one of 2 things. Either this channel low doesn't actually exist. It's not really there, and it's just a little bit wider, could be on this low. Or that means that the channel low is there. We'll see signs of that with the next couple candles holding it, right? You'll see the candle high hold it, and then if it goes above it, you'll see the candle's low hold it. Those will be those little clues that you'll see intra-candle that'll tell us, yeah, that channel is there, they just didn't respect it on this big breakdown. And that means that we are now looking at an exhaustive overblow on the bottom with an anticipation of a steeper correction back up. Now, we do still have that larger buy zone below us at around 1310 to 1305 that I would still really like to see. But with this kind of double-edged sword here, are we just showing that a channel is there, but we're not respecting it for a blow-off on the bottom? Or is it just simply a case that the channel actually doesn't exist there and we need to move it around? We won't know until we get more info, but for right now, I'm approaching it with kind of an open mind. This could be a potential blow-off on the bottom, but I'm also looking for larger support below. The way that I like to trade those kinds of areas is zooming into slightly faster time frames to give me more information. Here we can see that, okay, well, we have a nice bear trend in the most recent term. We have 2 legs down, and usually these moves end up in 3s. So with a 3rd leg down, the anticipation would be 1 more bear leg to the downside for a little more continuation. On the 4-hour chart, we just need a little more info before we can really put a nail in the coffin to tell us which way to go. But on the hourly, we at least have something to work with. So in the short term, in the overnight session, looking for a little bit more bearish to put in. But if we do start breaking back above this channel low, looking for that area to act as support instead for a potential bounce back up. And then looking to retest 27.5, just like we were talking about in the euro, once resistance turns support and back again, and that is the next area of major interest. On crude oil, we have a big breakdown. The inventories came out, I mean, pretty much as expected if you were sitting in the room with us, but the follow-through on the bear side was no joke. You know, the reference or the joke is always, don't catch a falling knife, don't try to buy it. This is like trying to catch a falling chainsaw right now. This thing will rip you in half. And this follow-through to the downside, I have to assume that with such a big bear blow-off on the bottom, we're going to stagnate for a little while as sellers take profit. Then it starts getting interesting. Are we going to see a bounce and then continuation down, or are we just going to get stuck here for a little while and form somewhat of kind of a little flag-ish type pattern and then reverse, sort of like a V-bottom? Or is this going to catch a larger secondary leg down to the next major area of support at 59.07? That's really what we're going to have to wait for. With such a huge move down, though, on a single 4-hour candle, likely for the next 4 hours or so, we're just going to go sideways. We're not really going to do a whole lot. Maybe a slight bullish tone to it, but overall, we are definitely bear-weighted right now with this drop, and very likely, high probability scenario would dictate another leg down, even if it's just a leg back to retest the lows, or an equal measured leg to the downside back down to around 59.07. Either way, though, in the long run, still looking for the short side. In the short term, though, we might have a little bit of a bullish correction in the overnight session. And then over on the S&P, we are seeing a little bit of a turn. It was a very choppy day on the index markets. There's still a huge amount of volatility. You know, we're still talking 100-point plus days on markets like the NASDAQ. Well, the NASDAQ's a lot more than that, but we're seeing a lot of volatility coming into the index market still, even though we're not really showing any good direction. We have a couple candles up, you know, a big bull bar up, and then 2 back down again, and then 2 down, and then 1 big one up. We're not really showing a whole lot of sentiment, and that is kind of the anticipation. We've been talking about this for a while, where when you have a big move down like this, one of two scenarios: you get a little bit choppy on the correction, sellers taking profit, or it ends up being a V-bottom and we just go like this and it goes flying back higher again. This is very choppy to the upside, but notice, like we've been talking about for that V-bottom, sellers are gaining no continuation. Every time the sellers try to dip in, it immediately fails right back up. As long as that continues, the sell side is doomed to fail. But if the sellers can swat this down, and what I'm talking about is something not necessarily a first turn, but waiting for the market to turn down with some proof from the sellers, hold a lower high, and then try to turn down again. That is going to be the sign that a lot of sellers are going to start piling in on to attempt to drive the market back down. The objective for the sellers is going to be back down to the low closes to lows in that area between around 58 down to 30s or so. And if that does fail and we start turning back up again, then we have the buyers beginning to target the high of that initial drop back to 2760s. So it's a little bit of a double-edged sword here. Which way do you want to go, S&P? At the moment, it looks like, well, we need a little bit more info for the sell side, so because of that, I have to sit on the buy side, but I really don't like the buy side right now. So in that situation, it's usually better just to sit on hands. When you can't pick a direction, doesn't make sense to try to manufacture a trade and put one on. Makes a lot more sense to sit on hands until you get a little more info. Overall, I am more on the bear side. I would prefer to see a bear-weighted drop back down to those low closes and lows, but until we get that secondary attempt from the sellers, it's going to be hard to pin that one down for a good entry point. So what we'll do, well, we'll sit on hands and wait for more info. So that's going to do it for the overall outlook. Just kind of waiting on the index markets. Everything else has a pretty solid game plan, though. You know, we might get a little more info from the overnight session when we come in tomorrow morning. That'll give us a little bit more to work with. I do still like the bear side on the indexes, but we'll have to wait and see what they can do tonight. Aside from that, as always, if you have any questions, you can send me an email, jbrink@slingshotfutures.com. Hopefully you found this useful, entertaining, and interesting, something you can add to your toolbox. And as always, like we always say, make a plan, trade that plan, follow the rules, and you will do just fine. Until next time, we'll see y'all then.